Hey, everybody. Thank you, Zeno, and everybody. You guys are just incredible. It's Monday, and it's another crap day. Everybody, you guys are just incredible. I want to make sure my audio is working. Alone today, and we're going to talk about where we are in this market. And I think, I'm not even going to say what's going on now, but anyway, let's just jump in and go to this. The story today is about confidence collapsing. I like alliteration. We use a lot of C's, for example, crypto confidence collapsing. And that's the story today. Of course, this is edutainment. And what I'm going to talk about is, and I've been talking for about 10 days now, shoes dropping, contagion. I'm sick of talking about it. But there is some breaking news, which is good. It's good to get bad news out of the way fast. Shoes are still dropping, so watch out where you are. And I promise you, in every one of the videos, you'll at least be entertained and you will learn something. That is my promise to you. I can't control the markets, unfortunately. And if I could, I'd make sure you're all taken care of. Anyway, let's just go. Markets suck. We know that. But there is some breaking news. And it's funny because the breaking news is not brought to you by mainstream media. Not brought to you by me. It's brought to you by Twitter. And I had a little fun tweet today. Right before I went live. And if you go to Google and you Google Genesis bankruptcy, you see nothing from all the mainstream media channels. You go to Twitter, it's blowing up. Everybody's in there. You know, Zero Hedge, Watch Your Guru, Unusual Whales, Bitcoin Magazine, Breaking Market News, DB. I mean, the point I'm trying to make here is Elon Musk gets a very hard time for what he's doing at Twitter. But Twitter is, like it or not, it is the source of truth. You want to find out what's happening with CPI, what's happening with Bitcoin, what's happening with, I don't know, some wannabe president. You'll find it on Twitter. You won't find anything proper on any of these other channels. So RIP those guys. Let's talk about the breaking news. Well, first of all, actually, this is slightly out of order. Well, Genesis bankruptcy is kind of the breaking news. It looks like they're going to hit the wall. That was pretty predictable from all the holes they had in their balance sheet. Again, we've been talking about it for a week to 10 days. But the big concerning part that we've also been talking about is Grayscale Bitcoin Trust. Is it exposed? And Bernstein says no. The good news is if Genesis is forced to file for bankruptcy, which is 99% certain they will, creditors will have zero claim on GBTC assets. Whew. Wipe your forehead with sweat, or wipe the sweat off your forehead or whatever. And the reports that even Coinbase also came out today and saying, yes, we have 635,000 Bitcoin as of September 30th. So don't worry, everybody. They didn't show the proof of reserves, but they came out and said that. So a lot of people now are beginning to get at least 98% confidence that it is not a house of cards like the rest of the cryptoverse that's leveraging against each other. It is okay. And we're seeing, again, further weakness in the market, but we'll talk about that a little further. Now, coming in, for those viewers who are not in the United States is going into a time that they call Thanksgiving. I don't know much about it. Something about pilgrims coming, finding the country, etc., and sharing food with the local natives. That's about all I know. But it is a time for people to spend time with family, take time off work, and eat. These are things that I will not be doing, but I'll be here with you guys if you're interested. Now, the stock market is closed, I think, on this Thursday, US stock market. And it's also open only for 2 or 3 hours or 4 hours, half day, basically on Friday. So it won't be a busy stock market week. And we know that low volumes can bring about low prices in some cases. When there's no demand, there's no buyers, things tank. Anybody's forced to sell, things are tanked. So prepare those rifles for some sniping opportunities. Now, what is interesting, a big thank you to Sanjay for sharing this with me. This is the Bitcoin price and the performance year over year between Thanksgivings, and that is this Thursday. So you can see here, ironically, 2014 and 2018 both were down 54% year over year. This year, we're down more than 70%. The question is, will Bitcoin rebound by Thursday? The answer is no, it won't. So we're not going to get that. We're going to have the worst ever, pretty much guaranteed, Thanksgiving to Thanksgiving, year over year Bitcoin price change. But it's kind of funny the way the 2014 and the 2018 was exactly 54%. It's like it's made up. But I expect this one to be somewhere around maybe 74%, 76%, maybe a little better, depending on exactly what happens in the marketplace. But starting to think we were at 59,000 this time last year and how things change. Now Bitcoin is the same price as it was 5 years ago. You can't make this up. Anyway, let's get on to some more entertainment. Now, one of the things we have been talking about is the crazy drainage from exchanges. We have had, in the month of November, and it's not even over yet, the largest monthly outflows ever so far, and on track to be the highest other than June 2022, but it's going to definitely be higher than that. And it's in previous times, typically Bitcoin flowing in and out of exchanges was more of a signal for price, but as more paper Bitcoin, wrapped Bitcoin, other chains, etc., and financial institutions are playing games, Bitcoin exchange flows are more reflective of current user trends despite the last major exchange outflows, marking local price bottoms. And just 12.02% of the supply now lives on exchanges. 12%, ladies and gentlemen. And I reckon pretty soon it's going to be 10%. And that's actually good for Bitcoin. It's good for the whole space. And I'll talk more about the silver lining later as to why people, really doing the self-custody thing, taking it seriously, will make it more scarce, which should ultimately drive price up. Metcalfe's law is driving the addresses through the roof, which should drive price up with network effects, etc. And we're only halfway through the month, so it's shaping to be definitely the biggest outflow in history. Now, in sad news, 51% of Bitcoin addresses are now underwater. That is, more than half of you out there are holding Bitcoin at a loss. And that's just, hard times. But again, if you're in this for the long game, it's very hard to time these things, as we all know. But price will go up, and I'll show you some data that proves that. First is the cohort breakdown. This is from Econometrics. And I love looking at this stuff. Like yesterday, I was talking about how many Bitcoins are lost, etc. We track this religiously, but this is somebody else did the work for a change, which is great. This shows you the cohort coin breakdown, more alliteration. And the whale addresses control 10% less coins than they used to. Interesting. The small fish control between 15 and 30% more coins over time. And the addresses controlling between 10 and 100 Bitcoin are down 2%. But heading back towards neutral, kind of flat. And the 100 to 1,000 Bitcoin addresses are up about 10% for the year. And the trend is getting pretty strong. I added a little arrow, red arrow on the right to show the 10 to 100 is about to reach the 1K to 10K level. And there's a reason why that's important. And I'll talk about that in a second too. And we are actually now at the point where the 10 to 100 will have an aggregate almost as many as the 1 to 10K. And the 100 to 1K is kind of, well, you see where it is there. Now, this is the important part. The only cohort dumping this whole year was the 1K to 10K Bitcoin on average. You can see they are far below where they were at the beginning of the year, down over 10%. And all of that extra supply is being picked up by everybody else. Again, the more than 100,000 Bitcoin, the 10K to 100K, the 100 to 1K, the 10 to 100 Bitcoin, the 1 to 10 Bitcoin, and less than 1 Bitcoin. This is just fascinating to watch all of this development and having much more of an equal spread of the coins across many cohorts is actually a good thing for the space. Now let's look at this one. This is Bitcoin addresses hitting a new all-time high. The number of total addresses now as of the 16th of November is 1.051 million addresses, which is stunning. And this has been going also kind of parabolic because everybody is setting up new addresses, setting up new wallets and stuff. It's a good time to be in the Trezor or Ledger business selling wallets. In addition, recession is looming. Investors are definitely getting worried. This yield curve, YCI yield curve inversion, has gotten, or it's getting more and more inverted over time. And it is actually more inverted than the lead up to the 2001 and the 2008 recessions. Notice the cadence every 8 years, 9 years, in this case, more than that. But the twist is that if you believe in the possibility of an economic soft landing, an inverted yield curve is exactly what you want to see. And the market response to softening inflation data over the past couple of weeks seems to show this to be the case. So as someone who still thinks more than most, we have a better chance of achieving a soft landing. But watch this yield curve. We are not overly troubled at the time. Economic data is kind of very different this time around between unemployment, etc., services growth, but there are still a lot of problems, and we are heading into a recession, I firmly believe. Now let's look at this. This is the hash rate. This is the problem that is crushing the miners. If you guys want me to do a quick miner update, who is most at risk, I can do that this week. Let me know in a comment below. I know it's not typically not very well viewed videos, but I'll do the work if there are miner fans out there. But this is how the hash rate is crushing miners. The hash rate, the hash price, which is the reward that the miners get for implementing hash rate, is down at about 58,300 per exahash per day. And with Bitcoin prices now down 76% from the peak, the mining industry is under immense pressure. More of those miners are going to hit the wall. No ifs, ands, or buts. Watch for the ones with high debt loads and the ones, because anybody mining right now, nobody's making a profit. Everybody's making a loss. The question is, how much loss can you sustain and how much debt do you have to service going forward? Now let's talk about this silliness. Part of the breaking news is Genesis hitting the wall, and an analysis of the Arkham Intelligence Dashboard per Crypto Slate research shows that popular crypto lender Genesis received billions in FTT tokens over the last 3 months from, of course, Alameda Research and FTX. And again, remember, these tokens are printed out of thin air like fiat and used for leverage. Anything with self-minted, self-printed, freely printed tokens, walk away from. That is a stern warning. It's just BS. So Genesis were kind of pinning their hopes to, okay, let's get a whole bunch of FTT tokens that keep this thing alive. Now, in relative terms, how big was FTX in terms of rug or hack or everything else? This is the cryptoverse from the beginning of time, all the biggest losses. And you can see FTX is by far the biggest. Mt. Gox coming in second, CoinCheck coming in third, Kucoin coming in fourth. We'll talk about them in a second too. And some other names down the list. And even big names like Binance were hit a little bit in the past with a hack and others. But in perspective, it's not small. But everything compared to FTX is really, really small. Let's talk about Kucoin. This is from the Block Research. And the important thing to note here, ladies and gentlemen, is Kucoin holds nearly 1/5 of its reserves in KCS. That is its own printed out of thin air exchange token. Should this percentage start growing rapidly, it may become a cause for concern. If they have to depend on it and sell it in a hurry, it may become a bank run, just like the illiquid FTT token formed the bulk of FTX's balance sheet. Same type of problem. And heaven forbid something happens to the peg on USDT or USDC, then we would be in complete Armageddon. Let's talk a little bit about confidence, and we're going to view here at the bond market. And the bond market is kind of the arbiter of truth as we go forward. And this is some data that I pulled for Coinbase. And the important thing to note here is they do have a bond due in the year 2031. And that may seem like, well, who really cares? But the actual value of that bond has dropped 15% this month to 50 US cents on the dollar. And according to, this is from FINRA, sending the yield, which moves in the opposite direction to the price, to a record high of 13.5%. And that means if they want to borrow money, they got to pay a lot of money to borrow money. 13.5%. That makes it very expensive. And the decline comes after nearly 3 months of consolidation and marks an extension of this very bearish trend seen early this year. And the yield on the company's bond due in 2026 jumped to 17%. That is a very, very high cost of servicing debt. And we're seeing that right now. Digital Currency Group, I covered it yesterday or the day before, I can't remember. I think it was Saturday. And how it's going no bid. There is nobody is investing in the cryptoverse right now. So even if you've got a semi-good business, nobody's touching it until all of this stuff shakes out. So let's look at Coinbase. The chart itself down 90% in a year, hit another all-time new low today. It seems like poor Kathy Ashe, she bought some of this recently, as well as some GBTC. It's like her Midas touch is gone. So be careful. Let's look at MicroStrategy as well. I hold some MicroStrategy. Here you can see it's not as bad as the 50% we just saw for Coinbase, but it is 74 cents. And again, the bonds tied to MicroStrategy have taken a similar beating and the yield on the company's 2028 notes issued last year to finance Bitcoin purchase climbed to 13.35% as the price dropped to a record 72.5 cents in the dollar. And MicroStrategy, remember, they hold 130,000 Bitcoin, worth right now about $2 billion on its balance sheet. But again, this shows you how confident the market is and how hard it would be for MicroStrategy to raise more money right now. It would be at a very, very expensive coupon. And they did get that allocation increase so they could sell stock to buy Bitcoin, but their stock price is also heavily beaten down. And here it is, down 80% over the last year. But that may sound really, really bad. But remember, Bitcoin is down 77% and it tracks Bitcoin prices extremely closely as we go forward. But trying to find a little bit of a silver lining within the storm, it's not all bad. So some of the things that I see, I think about, and I know it's a hard time for everybody out there, but these are some things that may be a little bit of positive. One, it's culling a lot of the weak players. We're seeing a big shakeout of silly protocols and stuff like that. And those that survive will be forged like steel. That includes us as investors as well. Bad VCs will be gone out of projects, less influence, and decentralization will be further along, as I showed with the Bitcoin address data and the spread of Bitcoin. And that's actually a good thing for the space. In addition, we have some legends like Mark Cuban. He is losing faith in crypto and he unfollowed a whole bunch of people today. That was kind of the big news. And his partner in crime is Kevin O'Leary, who also got very badly burnt. I think Mark Cuban as well got hit by at least one or two rug pulls. I can't remember, one in 2021 with Titan Finance and another one early this year. I can't remember, but he got a rude awakening when he joined the cryptoverse. And that's kind of what happens. But those that can stay the test of time do very well. Those are kind of, who is it called? Is it Max Kaiser or something like that? He calls them tourists. People just drop in and then get their butt handed to them. Then they drop out again. But again, this is a special place. Again, I was looking at a whole bunch of adoption data and addresses across different chains. The space is growing despite what is happening right now with the price of assets, what's happening in the stock market, etc. Another piece of good news. Okay, this is a guy I respect very much, Bill Ackman. He is hot for Helium, HNT. And this was an article just from today. And he said he's a billionaire. By the little background about him, he's a billionaire who his hedge fund Pershing Square Capital Management is now into Helium. He believes there is future for a decentralized network that allows users to set up their own wireless network for low power Internet of Things devices. And Helium also had some other issues in the past. It is a little bit tainted from saying they had a deal with Salesforce and Lime and some other players. I don't remember the exact history. But they did forge a relationship with Dish Network for their 5G spectrum. And again, like many other names, Helium is down 95% on the year, recently trading about $2.20, $2.25, I think, going from memory. But Bill Ackman, the interesting thing about him is not only is he a very good investor, but he's ultra conservative. And if he's touching crypto, that means maybe there's not that much crypto risk out there. One of his biggest trades as well, he was high conviction in shorting the heck out of Herbalife, which is a health supplement pyramid scheme. And that's what he identified. And he said, this is going to go nowhere. And he made a ton of money doing that. In addition, his time preference is kind of between short-term, long-term. He is between intuitive and quantitative. His focus is very narrow. And he's very risk-averse, which is super interesting. And by the way, we have analyzed all the top investors, and we built our own special quadrant. I'll add the link to that video series here, but it's super interesting to go back. It's like, okay, you can profile very quickly and easily all the top investors in the world, put them in a quadrant, analyze them in detail. And again, what takes me aback, and the reason I'm sharing this, is Bill Ackman jumping into HNT and crypto is a very bullish sign. And again, it's always darkest before the dawn, but we heard me say that before. And back in June, here we are again, another black swan. But these are the prototypes for each archetype investor. Top left are farmers, bottom left are daredevils like George Soros, etc. Top left are farmers like Warren Buffett, Ray Dalio. Then you have your explorers and trailblazers like Cathie Woods. And Stanley Druckenmiller, of course. And then you got your surgeons and snipers. Bill Ackman, he's like some of what I used to try and do, is be a sniper in the woods. Wait, be very patient, wait for those opportunities. But in this market, it's kind of harder to be patient. We all need to be patient. So with that, everybody, I hope you enjoyed the show. Hope you learned something from it, and I'll see you all tomorrow. Okay, take care, and thank you for the 3,000 lovely people out there in the audience. I love and respect all of you. Bye.